Hey, everyone. Thanks, Wade. Thanks, Moov, for having me. I want to talk to you today about slaying dragons for fun and profit. A few problems of areas in Fintech that I think need to get more attention, how to think about them, and how to approach them when you do. Now, obviously, I'm on stage not only because of my rugged good looks, but because I've spent almost 2 decades building, scaling, and exiting businesses that use machine learning to solve complex decisions in Fintech, fraud prevention, credit underwriting, account takeover, and now debt collection and recoveries, consumer debt in general. You can, if you must, find me on Twitter. Now, a little bit about TrueAccord. Every year in the US alone, there's 70 to 80 million consumers who are impacted by debt collection. And when you have debt in collection on your credit report, you're essentially locked out of traditional financial services. You're rejected for loans, cars, and so on. And there are hundreds of billions of dollars in economic activity that we can unlock by helping these consumers not spend their money on late fees, on interest rates, on loans to roll their debt, but rather on actually spending on what they need to spend money on their essentials and on regular consumption. Now, at TrueAccord, we're building an iconic brand like a Weight Watchers for debt that's supported and trusted already by millions of consumers that touches every step of the life cycle of consumer debt, from the first day of delinquency to being in depth of debt collection to paying down their debt, getting out of debt and starting to get access to affordable financial products. If you're working on a solution for this crowd, would love to talk to you because maybe there are partnership opportunities here. Now, you hear debt collection, obviously, for many reasons. Many people, the first response is, why deal with it at all? And here, that is exactly my point. Debt collection is like a dragon, like a bad, big, complex, unappealing problem space that we don't think about very often. And those are the dragons of Fintech, like the problems that we don't think about often, the markets that no VC associate obsesses over, the types of things that you have to really spend a lot of time on to understand, unpack, and solve. However, these are problems that impact tens of millions, hundreds of millions of consumers, and if we solve them, we really make a huge difference. So this is an excellent question. Why work on a problem that doesn't touch me necessarily, that is maybe big? Debt collection is a $15 billion market, where I could work on something that's cooler and get the high valuation, grow a company, and so on. And you know what? Great question. Maybe you shouldn't. This is not a first company style business. If a first-time founder comes and wants to start a company, I would not suggest they start chasing those dragons and try to solve them unless they absolutely want to. But if you have gone through a company or two, if you are seasoned, if you are willing to and ready to apply real disruption to very complex problems, we need more founders and more executives that are willing to spend time on those problems, because otherwise they will not be solved. This is an opportunity to introduce real disruption, to make an actual difference, in addition to a lot of other companies, but to do something to solve an area that people usually don't look at, that has gone unsolved for a very long time. Some examples. There are multiple assistance programs on a federal, state, and local level. But accessing them is downright Kafkaesque. Qualifying, applying, filling forms, getting on the phone, getting access to funds, deploying the funds is extremely difficult. Rent is only one example. Okay, the eviction ban is lifted, but this is the amount of money as of a few weeks ago that has been distributed to people who actually need it to not be evicted. Right? This is money available from the government that has not reached consumers. So unlocking access to benefits is a huge problem that has not been dealt with yet. And so one of the problems, the big problem in this market is reaching consumers and being able to build a solution that actually services them while making money. And I really like what Propel is doing with their provider's product, but they're almost the only ones out there really thinking about access to benefits, how to help consumers. Second thing is rebuilding credit. Consumers that don't pay for their debt do that because of trauma, healthcare issue, an accident, losing a job, getting divorced. And then when they're done with the trauma and they start emerging, when they start paying back debt, they're faced with a catch-22. You need to borrow in order to improve your credit score, but you cannot borrow if your credit score is under a certain number. Now, different companies have tried to solve this in different ways, but CAC to LTV ratio is a big problem. Acquiring consumers that don't have a lot of money and servicing them effectively continues to be an issue. Some of these companies like Self and Sisu are maybe adopting a little bit of a slower growth curve in the beginning in order to attract a lot of consumers that they can actually have a relationship with. And jury's still out to see if this works, if they actually manage to build large companies that way. Although they're trending in that direction, it's really cool. And finally, short-term loans. It's often said, and it's true, that no one likes payday loans other than the consumers using them. If that is a sentiment that's foreign to you, I highly recommend reading The Unbanking of America, a very interesting book that will tell you stories of consumers making very rational choices that would seem irrational if you were not facing the situations they were facing. And so earned wage access has made some leeway in replacing payday loans with something else. But this whole idea of bridging surprise expenses and smoothing expenses and income has not been solved yet. We're seeing some companies making headway, but again, it's a big and complex problem from a regulatory perspective, in the ability to acquire consumers, and being able to service subprime products, especially if they're balance sheet driven at scale, is very expensive. And so the result is that the cost is often rolled to the consumer in the form of high APRs. And that is not, as we see from payday lending, a very effective solution long term, a very constructive solution for consumers. So thinking through these problems, again, I'm showing you problems that I don't think have been solved at scale and need a lot more attention. So I'm really excited to see what Bridges and Cash App do in this space. But again, we don't know until we see actual numbers on how payday lending has shifted over time. Now let's talk a little bit about if you start a company that's going after these complex problems, how do you approach it? How do you think about building and scaling a company like that? I have a friend who's a scout for a PE firm, and we meet every few months. And he's like a modeling agency scout who tells me, listen, we would absolutely recruit you if you were 6 feet blonde and slim. And I say, can't do. And he says, but have you considered being 6 feet blonde and slim? My point is that companies that go after these complex problems don't fit the playbook of your traditional investment. TrueAccord, however, raised close to $100 million from prominent VCs, is growing well, and is definitely a venture scale and venture speed business. So what kind of playbook, or how should we think about the playbook if we're trying to approach these problems that are less obvious, harder to solve, and take time to dive into? Some thoughts here. Now, number one, buckle up. This is what I'm saying. I don't think this is a first founder type of thing. I don't know if we would attract this much talent and attention from investors if I didn't have a few exits and a history of successful companies. This takes time. It takes time. You have to accept being misunderstood for a very long period of time. You have to think through how you're going to build your company step by step and be very thoughtful about it. Number two, the mission. when we started the company, obviously talking to people about debt collections and recoveries, we would get a lot of rejection from candidates and from investors who say, I don't really care about the problem space. I don't really want to solve debt collection. Sometimes we still do. However, once you get to our size, once you have brand recognition, and definitely once people have joined you, they have gone through the process of explaining to themselves and in their heads, explaining to friends and family why they're working on this problem. At that point, it becomes an asset. It's an incredible tool for internal alignment and retention. Because when people have joined you, they want to solve this problem, and they want to solve it at scale, and they're committed. So that's a good thing. After, it's a little bit of a bad thing, a little bit of a liability. Next, clients. We're in a developer conference. It's developers selling to developers. We talk about technology that's really cool. If you're in SaaS, clients are super excited. They love you even as they replace you. They know how to talk to investors. It's an amazing dynamic. In our market, clients call me and rant about us while telling me that they're doubling and tripling their business with us. And so it's a very different, very old school, cantankerous, kind of slow-moving market. And it's not going to be the same relationship that one may be used to from other areas. The consumers that you work with, you may not share a lot of life experiences with them other than being human and sharing the empathy for the human experience. So your relationship and your team's relationship and your investors' relationship to the company and to clients and how to understand what success is has to be articulated and understood well. And you just cannot go and get those energy injections from your clients. I should say, not from all the clients. We have Fintech clients that are very energetic, positive, and fun. And we have clients that are very old school and will be very demanding and very specific. And we also appreciate that because when we came into the business, we realized that we came in with eyes wide open, and we knew these were going to be the challenges that we'll face. Next, choosing investors wisely. The investors that are involved to record, venture capital firms know and are convinced that they see the big pile of gold at the end of the rainbow. They have patient investors. They're willing to wait, and they're willing to dive into difficult problems with us. This is why we've been able to scale. This is why we've been able to get to where we are. Next, planning a multi-stage rocket. You know the analogy. Scale-ups need exit velocity to reach space, right? To reach the outcome that they want to reach. These markets, these dragon markets, have very high gravity. They will pull you down. If you count only on your first product as a way to reach that scale, you will likely fail. Similar with us, our third-party collection product is just step one. And I'm going to talk about one of the next steps soon. But you need to, again, with eyes wide open, come in and say, this is the difficult first part that establishes me in this very difficult problem space. And then step two, step three, I'm going to build on the distribution and the brand recognition that I have to continue to expand my reach and to give me more rocket fuel to get to space. The advantage is, if you lean in, you end up being the only person in space, right? The only recognizable name in your problem space. So it has advantages, but you need to have gone through the work and to pay your dues before you get there. Next, mature early. There's no other way to say this. You need to be an experienced operator, and you need to hire experienced operators. The margin for error in these markets is very, very slim. Stuff that any SaaS company would be like, oops, sorry, and move on. We spend a lot of time on making sure that we are reliable, making sure that we integrate well with our clients, and making sure that we service. Not to mention regulation. I'm just talking about the requirements of the clients and how everything is under a microscope. And so you need to promote, develop, and hire a team that matures quickly and can reach that level of execution very, very early on. And finally, remembering that making money is also the goal. And why am I saying that? It's very easy to start a company in that problem space, like debt collection, like access to benefits, like subprime lending, and then spend all of your time in panels and think tanks and talk about your mission and feel very good about yourself without making an actual difference. The only way for us to really change these markets is to build venture-scale businesses in them. And so we have to start with that approach. This is not a nonprofit. This is a venture-funded company that aims to have an outsized outcome and will have an outsized outcome, in our case, in other people's case. Finally, connecting this back to True Accord, I want to talk about True Accord Retain, which is to us the next stage of our multi-stage rocket. For years, we've been doing, again, third-party collections, like late-stage, post-charge-off, competing with traditional collection agencies. A lot of companies, a lot of prospects, especially in Fintech, said, we want your expertise, but we want our brand. So Retain is exactly that. It's an API-first solution for the internal teams that uses the client's brand to communicate with consumers and get them back on track. This is from the first day of delinquency, when they're late by one day, trying to get them back on track, even before you involve the collection agency. If this is relevant to you, we have our API docs on there, and we'd love to talk to you. Just to wrap this up, there are many, many problems that we're trying to solve in Fintech. In fact, Fintech is an umbrella term for a lot of different segments. I wanted to highlight today that there are areas that for many in the audience, I'm guessing, I don't know all of you, are not the first ones to come to mind when they think about their next project, their next company. However, these are huge problem areas that impact a lot of consumers that can, in some cases, prevent evictions, prevent trauma, sometimes save lives, and that if experienced operators, experienced founders go into those segments with the right mindset, with eyes wide open, and with the right playbook, we can create more venture-scale businesses that will make a difference in places where Fintech has never gone before. Thank you very much for listening.